Good morning, my friends. Paul here coming at you with a Crypto Coffee update where we talk about all of the news, events, and happenings in the exciting and ever-emerging world of decentralized finance. And of course, I have my hat on today. I've been outside working, something I've mentioned before and really want to express again. I love being outside, especially during the springtime. I got my tomatoes in the ground, so guys, life's a garden. Dig it. And also, enjoy with me a fine simultaneous sip of coffee, the namesake of the series. Cheers. Great stuff. Now here we are at Cryptide.cc, our lovely website, where you can get all kinds of information and news, including the crypto coffee videos like you're watching right now. So head on over to Cryptide.cc and check us out. Now moving on, here is decryptmedia.com. Decrypt is a wonderful source. I stumbled upon them recently and I gotta say I'm really impressed. Just happened to see somebody tweet about it and hopped on over to it and really like what I see. They order their news in chronological order, which I think is ingenious, something I've seen before, but just the style in which they do it really gives a nice temporal flow, kind of informs exactly when news was authored. They also have a learn section over here on the left hand side where you can get little pieces of information. You can see 5-minute read, 3-minute read about all kinds of various things in the crypto sphere. So maybe you missed something about DigiCash or Polkadot and you want to learn more about it. Well, this is a great place to just kind of plug in, get a little rundown, and use it as a springboard for doing further research. So great stuff. I really should mention this isn't sponsored in any way, shape, nor form. I just call it like I see it, and I think this is great work. So cheers to Decrypt Media for doing it right. All right, now moving on to an article from Decrypt. The judge has dismissed the Winklevoss, guess it could go either way, the lawsuit against Charlie Shrem. We talked about this previously. It was a lawsuit started by the Winklevoss twins against Shrem. Since back in 2012, they told the Winklevoss twins told Charlie Shrem, hey, here's $750,000, you can see here, go buy us some Bitcoins. And indeed, Charlie Shrem did. However, it is alleged that he kept 5,000 of these Bitcoins for himself, something that a judge decided that's exactly what did not happen, and he dismissed the lawsuit with prejudice, meaning it cannot go back to court. So it seems as though there is now a lid on this case, and it is officially over. Ultimately, it seems as though that the Winklevoss twins were ordered to pay Charlie Shrem's legal fees twice, and they recently reached a confidential out-of-court resolution, and he is dismissed from this case. So, very interesting stuff there. Here's Stephen Pally again, an individual on Twitter. I'll call him a crypto lawyer. Why not? Let's see if he likes that title. Essentially, he was saying that this was a case that began with the plaintiffs trying to freeze and seize Shrem's assets before he even knew that he had been sued. So, interesting situation there, but suffice to say that the Winklevi, I like that plural of Winklevoss, lawyer was ordered to pay a $15,000 deposition for misconduct. So it's hard to know if that led to the case finally to go the way sorry, it's hard to know if that led the case to finally go the way of all flesh, but the defense played for keeps and won. Very eloquently stated by Mr. Paley there. Now moving along, you can see an Israeli startup, Siren Labs. We talked about these guys before. They launched a crypto phone known as Finney, named after the late Hal Finney, an ingenious cryptographer that some speculated Satoshi Nakamoto, but as said, he is the late Hal Finney and is unfortunately no longer with us. Now, this Israeli startup, Siren Labs, unfortunately had to lay off 15 employees, which is 25% of their workforce. The phone just didn't sell like people thought it would, and of course at a price tag of $999, a price that really sent people's heads spinning when they found out that would be the cost of one of the new Apple phones a short while ago. One has to wonder if the crypto space is large enough that enthusiasts would be willing to shell out $1,000 for a crypto phone. An inceptuous comment I saw by a user out in the space, just out in the wild, said exactly this, well, not exactly this, something along the lines of, why would you buy a crypto phone? It's basically like wearing on your hat, I have a lot of money, check it out. Kind of making yourself a target inadvertently in some situations. So I actually didn't consider that, and I think that is a very inceptuous thought process for sure. So there's kind of multiple confluences that perhaps depress the overall sales, including the frigid bear market in which we find ourselves. So definitely wish this company all the best, and perhaps they're just too early. Early mover advantage isn't always the best thing, because sometimes you have a great product and it's just not time for it yet. People haven't begun to to wrap their heads around exactly why this may be a beneficial thing. Here's a great example. Let's head back over to Decrypt. Digicash, I actually mentioned that in passing. Digicash was the first kind of digital currency. There was experiments with it before, but in terms of truly anonymous digital currency, Digicash was it. And it did require the presence of a bank, but using a type of cryptography, it obfuscated who was actually making the payment. This came out in, drumroll, 1994. We're talking a long amount of time before Bitcoin, 15 years before Bitcoin. So you want to talk about being a bit before your time. Digicash was indeed it, founded by none other than David Chaum. So yeah, head over to Decrypt Media, read about it, use it as a springboard to dig into the history of digital payments. Really fascinating stuff there. So as said, best of luck to Siren Labs. Hopefully they can pick themselves up, dust the dirt off, and just move into a brighter future, especially for those 15 employees that are no doubt looking for some new projects to chip away at. Now, heading over to the block, fantastic stuff from the block. Really, they have the memory of elephants over there. They spot good stuff and they hold on to it, and I can appreciate that. They noticed that from Bloomberg back in October, Coinbase said, hey, 2018 looking good. We're hoping for $1.3 billion of revenue for the year, so that would be really great. Here's the actual article from Bloomberg. They're expecting to bring in $1.3 billion in revenue. That's from October 30th, day before Halloween. Well, it looks like the spooky spirits of Halloween dug their heels into Coinbase's projected earnings, because here's the projected earnings, and unfortunately, as said, it is 60% less than they originally projected. So that's definitely a oof moment, but nonetheless, that's still a very solid return of $520 million in revenue for, again, as I like to call it, the frigid bear market. Here's the article from Reuters. Big corporates back crypto plumbing. I guess the underworkings of the actual infrastructure despite currency caution. So always interesting and well-written headlines by Reuters, most of the time at least. And this definitely goes into the details, the nitty-gritty of revenue. And here is bets by big business on crypto and blockchain soar. You can see it has just gone through the roof from 0.4 billion or 400 million to 2.4 billion or 2,400 million. So a huge explosion in investment. Already in 2019, investments by big corporations have doubled from 2017, the entirety of the year 2017. So very interesting stuff there. And if you want to dig more into this data, of course, everything below in the description for you guys, since, you know, after all, sharing is caring and you gotta cite your sources. How many times have I said that? That's absolutely something I try and live by, guys. I love information. I love sharing information. And I hate it when someone doesn't cite their source, because it's like, oh, that's really interesting, and I really want to sink my teeth into that information, but you know, if I don't have direction, hey, you know, not sure where to go, got to do my own digging, my own little sleuthing. So I like to share what I have, and again, it's basic plumbing, just stuff like Coinbase and other sorts of basic infrastructure needed to onboard further users into the crypto space. So despite the near 60% downturn from projected revenue, no doubt the folks at Coinbase are still smiling ear to ear with their position in the overall market. Now, more great stuff coming out of the block. They really have some fantastic stuff. Frank Chaparro is really a bright mind in the space, I gotta say. Binance quietly removed some Wall Street jargon from its tokens white paper. For those of you who aren't from Wall Street, you're probably thinking, yes, don't have to read all of this complicated language, but nonetheless, there may be a ulterior, perhaps not negative, but ulterior motive to this. They edited the white paper's outline on how it interacts with the BNB token. They said they did this to clarify, but it doesn't actually repurchase BNB. It actually burns it. It doesn't repurchase it from the users. It's a discreet update of this sort that raised questions and other this one always gets me, surreptitious revisions made retroactively. That one, for some reason, that one always trips me up with my my articulators. But nonetheless, you can see the revisions here. We'll try and blow these up. Let's go ahead and open image in a new tab. Just make that a little bigger. Yeah, you can see here, this is ultimately what has been changed. BNB value and repurchasing plan has been changed to BNB value and the burn. So I like that, the burn, proper noun. Repurchasing plan, we use 20% of our profits to buy back BNB, was changed to destroy BNB based on the trading volume on our crypto-to-crypto platform until we destroy 50% of all BNB. So this is part of Binance's approach, decreasing the overall supply of the BNB token to cause an inflationary effect on the underlying value of the token. So very interesting stuff. And while this has been likened to a sort of stock buyback, again, we're seeing the inceptuous Stephen Pally. He has been a feature on this episode thus far. He's saying that changing the language in a white paper does not necessarily have an impact on a regulator's analysis of whether or not something is a security. So while Binance potentially is shifting their footing in terms of language in order to position themselves as a non-security, changing that language may not actually impact whether or not a regulator views the BNB token as such. So very fascinating stuff, but suffice to say, if it really breaks their heart and they hate it, they can dry their tears, not with BNB tokens, but with wildly prevalent dollar bills all over, because you can see they've made tons of money. Binance's profit is well above 50 million for 2019 already, just in the first quarter. So if they're feeling bad, they got dollar bills to dry their tears, that's for sure. Now, we have a very prestigious individual here with us today to give us some information. He is known as Source. Source is everywhere. I see Source is familiar with everything. He's familiar with aviation, crypto, law. Source gives all kinds of information. I don't know who this individual Source is, but I see him everywhere. Just a joke, guys. It just kind of gets me sometimes when it just says sources familiar with the matter say. It's so opaque, not easy to pin down who knows what in these situations. Definitely a diffusion of kind of authority over who's putting out this information. But suffice to say, we're back at Reuters again, and the FSA, the Financial Services Agency of Japan, is allegedly, according to our all-knowing source, is going to require crypto exchanges to bolster internal oversight. Thank you. That is something that I think is fantastic. Although it is at the behest of government to force onto these entities a tighter sense of regulation and fiduciary responsibility, perhaps. I'm not sure if that term is applicable. There is a lot of legal implication there, but just as a general layman, non-legal interpretation of fiduciary responsibility in its most general sense, it does seem that the state is trying to impose that onto these new institutions. And Japan has just been hammered with hack after hack. The CoinCheck hack saw over $500 million worth of NEM hacked. Let's see, what was the name of the other one? Off the top of my head, I can't call it out, but there was another major hack recently, about $30 million. So it makes sense that, according to the all-knowing source, that the Japanese government is trying to restrict the less secure hot wallets and prompt exchanges to shift to cold wallet storage. That's something we've said here at Cryptide many a time. Cold storage is the ultimate form of storage if you're an exchange, and even if you're an individual. Having something that's offline means that if your network is compromised, ultimately your digital assets are still safe, as they are not directly connected to that network. So I think this may be a good thing, but as with governments in general, there's a lot of red tape. There's a lot of asterisks that lead to some subset clauses, so who knows what can sneak in here. But one thing's for sure, just taken in a vacuum, exchanges shifting to cold wallets is something conceptually I think most people would be on board with in terms of user security, for sure. Now, speaking of users and their ability to interact with this new and exciting technology, one of the big four auditors, EY, is making that even easier. I find this incredibly impressive. They've unveiled something called Nightfall. It's an ambitious bid to bring businesses to Ethereum. Anna, nice alliteration. I'm an alliteration guy. Good stuff. It's called Nightfall, as said, and this is what I find amazing. They're not just making it open source, all right? Open source is nice. Here's a distinction. Open source allows the software to be used without paying royalties. The author retains copyright and can, in theory, revoke or change the licenses. And Byron, this individual from EY, essentially said, I haven't seen anything like that happen in crypto even once. Now, on the other hand, public domain, it involves a complete waiver of copyright. It's rare in software, but, quote, creating the potential for disputes if, say, copyrighted, here's a quote, my bad, it doesn't provide a clear licensing framework for contributions to the code base. So ultimately, they simply want to give away its work, their work, EY, without more. There isn't a ton of risk in releasing this into the public domain. So essentially, this is more than open source. This is EY coming out and saying, hey, take it, do what you want with it, build atop of it. And what's even more interesting, and this is on the public Ethereum network. Let's go ahead and find this real quick. Oh, there it was. Public Ethereum network. So this isn't some private variant that we've seen before. We've seen plenty of private variants. I'm trying to think of one off the top of my head. I see it in my mind's eye. But I'm sure just Googling private Ethereum client, you can find a plethora of those running it in isolation. However, this is right on top of the public Ethereum network. So this is fascinating. And Brody is saying this is $1 million worth of stuff that they are just giving away. So really amazing stuff there. You can see here they're really pursuing ERC 721 for non-fungible tokens. The reason being, they believe that they should deal with tokens bound to physical goods. Personally, this is something that I've studied pretty heavily, and while I'm not a programmer nor by any means an expert in the implementation of ERC 721, I'd be very interested to see how the professionals over at EY would react, or if they're familiar with ERC 1155. That's Engine Coin's implementation. They allow for a non-fungible token with an underlying fungible value associated with it, something that sounds very applicable to bound physical goods, since you can in turn fluctuate the price of the related physical good using the underlying value while still ensuring that it is indeed a unique good in and of itself. Not to mention, physical goods on the blockchain have their own prohibitions. It's not like you can plug up a physical good to a blockchain and walk away and say everything's great. It doesn't take too much to say, yep, this order has been confirmed and received, when the order isn't really there at all. So there's definitely some minders that need to be put into place, some managers to ensure that at least at set intervals, predetermined intervals, quality assurance is indeed assuring that goods and services are still flowing where they need to be flowing as the data is attested to the chain. So unique, very unique issues that are presented when you try to revolutionize these kinds of things, but they're definitely not insurmountable by any means. And to have one of the big four auditors releasing software to help with that is truly encouraging and exciting to see. So this kind of thing isn't going away. And as said, sometimes it starts small. It starts in regions where you don't often expect it. And that's what we're seeing here from 3 countries that want to issue Bitcoin bonds. The globalization of Bitcoin is growing by the day. As said, these aren't first world nations per se. Afghanistan, Tunisia, and Uzbekistan, so 2 Central Asian nations. I guess Afghanistan counts as Central Asia, depends on how you define your geography. Tunisia is North Africa. And of course, Bitcoin is not a country, but indeed it looks to be influencing them. Afghanistan, Tunisia, and Uzbekistan, they are talking to the IMF about potentially launching a Bitcoin bond, an instrument that can help out their national currency potentially, since indeed these are nations that have suffered from war, turmoil, and just general lack of access to the traditional capital markets. For Uzbekistan, China's One Belt, One Road initiative may well help with that. For Afghanistan, the winding down of a decades-long war, I think everyone would be happy to see that. And Tunisia, having suffered from the Arab Spring, albeit not as intensely as some of its Arab neighbors, definitely these 3 countries face unique situations but are seeking a common reprise. You can see here that they want to launch it on the, what did I see, Hyperledger. Sometimes I get talking. There we go. Such as the Hyperledger fabric. So these individuals from central banks, such as Afghanistan, are saying that they're interested in Hyperledger and other open source tools to peg a bond to the overall Bitcoin valuation. That could be a fantastic semi-independent instrument to show the global financial entities that indeed, because this instrument is not intrinsically controllable by the central bank of that nation, they need to have some kind of fiduciary responsibility, as we said previously. I read a wonderful article not too long ago about Argentina and the near constant defaults and financial woes that this country has been experiencing. And one of the arguments was perhaps they should switch over to the US dollar, since at least then they wouldn't be able to mess with the barometer of inflation by devaluing their own currency so heavily. This is a similar approach, suggesting that Bitcoin, even more independent than the US dollar, could serve as an independent financial instrument to more objectively verify the overall health and foresight in terms of financial approach of these given nations. So fascinating stuff there. And as usual, here is Christine Lagarde, the head of the IMF, the chief of the IMF, who said previously, she's the managing director. Of course, the 2 I picked weren't the managing director of the IMF. She said that these crypto assets are indeed shaking things up. She said that just a few days ago. So who knows if she was made privy to this information about these 3 nations, and that's what perhaps spurred the comment. But the IMF is still remaining cautious, as perhaps they should, given that they are the, I guess you can call them the kind of stabilizing force. I think in reality, many times they're the destabilizing force in the long run, but they definitely don't want to jump on unproven digital innovations. And as said, Mrs. Lagarde, she admitted things are being shaken up by these crypto assets, so perhaps they will not remain unproven for very long. Now, blockchain voting, a terrible idea. It's just a bad idea. The technology is too young for that. There's so many vectors of manipulation and attack. The regulators and individuals who preside over elections are not technologically literate enough to implement this kind of stuff, meaning that there is a disparity in knowledge that opens up an entire new vector of potential exploitation. I hate to be so negative on it, but it's worrisome considering this is how individuals represent themselves in the eyes of their local, state, and federal government, at least here in the U.S., talking about West Virginia after all, and it's potentially worrisome even if you believe that this is the future. Ultimately, the plan is to do it again in the presidential election. We'd love for this to become part of West Virginia's voting. But the voting platform has a lot of issues, performance, and safety, according to Kevin Beaumont. He did a tweet storm breaking down some of the issues here. He highlighted some of the grave security concerns, including database credentials being saved in plain text and shared on GitHub, expired SSL certificates, lack of security officers, not being decentralized enough. That's a very relative term, decentralized. Depends on how you define it. I believe Angela Walsh would agree with that there. That's kind of her thought process, and I echo that. And of course, there's security audit companies denying any relationship with them. With the threat of Russian hacking looming large, these are serious concerns. As always, the Russians! Got to worry about those guys. They're under every bed, in every closet. I opened up my almond flour and saw a Russian in there. I think he was trying to hack my almond flour. Everybody knows anything that goes wrong can't be part of any conspiratorial thing. It's definitely the Russians. For a state that can barely build a car, Lada looking at you. They sure know how to get into some elections. But suffice to say, the Apstra, the tech malware in the system, they sound pretty optimistic. But yeah, I want to know what you guys think of this, because you probably could tell I'm pretty skeptical of it. But what do you think? Do you think perhaps these security concerns can be rounded out and ultimately this can be brought online in a safe way, slowly but surely? Or do you believe perhaps that we should back away from voting on the blockchain and really kind of keep things as they are for now, as we ascertain with more accuracy how this technology may be best applied rather than in a potentially rushed sense? Let me know what you think below in the comments, or hop over on the Discord found below in the description. We have some great conversation there, guys. All right, let's go ahead and put a lid on our wonderful time together. Unfortunately, we're running up on time. With Kraken, they are officially delisting Bitcoin SV. We took a look at the poll previously, and indeed they are pulling the plug. Here's Anna again, some great articles from her in this episode, so cheers to you, Anna. They are going to be pulling the plug on April 22nd. Trading will cease on April 29th, and finally withdrawals will stop May 31st. So if you are a BSV fan, I know I got one downvote on my last video with Craig Wright, so I know you're out there. Go ahead and get your stuff off Kraken if you do have it on there. And indeed, it seems as though Kraken, when they listed BSV originally, they said in a newsletter that BSV didn't really meet the criteria for listing to begin with, but due to the nature of the contentious hard fork, they were going to go ahead and list it. As you can see, contentious hard fork, look at that. So they went ahead and put it on there anyway. Here's a quote: "They are suing us, our investors, well-respected and prominent figures in the community, and that community got to the point where it's fed up with it." According to Jesse Powell, CEO of Kraken, it's completely antithetical to what the community's about. And that's true to an extent. I definitely agree with that. Dragging the court system into every little dispute in crypto is completely antithetical to self-governance and self-determinism, really. So to an extent, yes, but of course there is a place for dispassionate arbitrage that is always going to be necessary to some degree in human action, since individuals are individuals, different strokes, different folks, and discrepancies are bound to happen. Although I think almost everyone can agree this is quite the overreach from Craig Wright and friends. And this all started with a Twitter poll. Let's go ahead and click poll and head on over to Twitter and take a look. I think we have the results. Yep, 71% said Ixnay on the Bitcoin SV on Kraken A. So they are pulling the plug. So really interesting stuff there. Well, I believe that's all the time we have for today. As said, if you want to learn a little bit about just some stuff in crypto, head over to Decrypt Media. Really great stuff there. Or Cryptide.cc from yours truly and all of us here at Cryptide. We thank you for the support. We love you guys. We're so excited to help grow the space with you all. It's been said, if you want to go fast, go alone. If you want to go far, go together. And that's what we're all about here at Cryptide. We want to go far, so we want to go together, hand in hand, to build a brighter future for everyone. and all of our children. So yeah, I know that's a bit of a waxing and waning the philosophical futurisms, but that's all we have time for today. Much love, guys. My name is Paul, signing off. We are Cryptide, and remember, the tide is rising, as is hopefully at some point Coinbase's revenue. I know, dry their tears with dollar bills. Much love, guys.